Our emotions are not us. Our emotions are telling us a story about ourselves, where we are.
Hello and welcome back to Change and the Market, your weekly look at the changing real estate market. I'm your host, Brian, joined once again weekly by Mr. Chris Masiello. Chris, how you doing this morning?
Hey, Brian, good to be with you and good to be with everybody in our community.
Fantastic. Let's get right to it like we always do. Chris, what has changed in the past week in the housing market?
Well, thanks, Brian. As you and I were just talking about before we started filming, it's this continuing ongoing discussion, and about what's happening in the market. And the last, like the incremental changes. And so like the last week, there's been really a lot more chatter about how the housing market is kind of coming out of its doldrums. And there are a few indicators which I thought was kind of interesting. First is last week, building supplies went up quite a bit. I think lumber went up 16%. And so what do you get out of that? Well, you get out of that builders are drawing down on lumber supplies because they're getting ready for the spring market. We were talking about that last week. Spring market doesn't start in April. Spring market kind of starts now. So, we're filming this, February 1st, and interest in the market doesn't start for the spring market, doesn't start in April or May or even March. It starts now. And so, the fact that lumber prices, building materials are going up means builders are starting to draw down on supplies so they can be ready for the spring market now. The other thing, which again, it seems to be a constant source of conversation for us, is interest rates. And of course, it does occupy a large space in the housing market. But with interest rates have gone up, the Federal Reserve now is indicating that they're going to be much softer on raising rates, if at all. The general consensus is when the Federal Reserve Board meets next, which is soon, that they'll do a quarter point raise, which is really not that much, and then maybe nothing beyond that. And the other reason for that is because inflation has started to subside. And so, you can see the economy starting to even out a little bit, and all of that, bodes really well for housing.
Awesome. So kind of taking all that information, because of what we're seeing with all of these factors kind of converging, how should buyers or sellers use that information in the coming weeks?
So I think it's like what we've been talking about. If you're a seller, now's the time to be on the market because conditions are improving. There's still a shortage of inventory, and you're gonna occupy and garner a lot of attention right now. And then I think the same thing for a buyer. If you're looking for more variety and less competition, now's the time to be in the market. So I think really just what we've been talking about: strategies for buyers, strategies for sellers. Seller, this is a great time right now because you don't have a lot of competition. Buyer, this is a great time because you have some more selection, and you're not competing in a spring market, which might be a multiple offer environment.
So kind of bouncing off that to our general advice section, we were discussing before we got started here, you had an interesting analogy that I'm really interested to hear you kind of expand upon. So what kind of advice do you have just in general for our listeners?
I was thinking about it this morning, where we've been sensing what's happening with like what's going to happen with the market, and there's a sense that we're kind of coming out of the doldrums a little bit and all that. And I always use the analogy that our bodies are like soft technology. So we don't have dials and readouts and things like that, but we have emotions. And emotions tend to be our best indicator about how we're sensing into things. So for instance, like when we're in our car, we have a car dashboard that will give us, speed, temperature, gas readings, and all that stuff. Well, the dashboard's really not your car. The dashboard is telling you about your car. And it's the same thing with our emotions. Our emotions are not us. Our emotions are telling us a story about ourselves, where we are, right? Just like the dashboard's telling you a story about your car. And so here we are, beginning of February, kind of, leading into a housing market. We're all kind of feeling like, things might be lifting a little bit. And so I think the lesson is to pay attention to it, right? Like understand like our emotions are a really good leading indicator about how we're sensing into something. Either it's, we like it, we don't like it, we're concerned about it, frustrated, whatever the case may be. And then I think the same thing, we can equate that to what's happening, like in the housing market. Like we can sense things are happening, so we have to pay attention to it. Really, a lot like your dashboard. If you were going down the road and your car was on empty, you wouldn't ignore it. So I think it's important that we use our intuitive gifts that we have, the soft technology that we have, in our bodies with our emotions to kind of appreciate the environment we're in and then be able to react to it.
Awesome. Excellent advice. As always, that's going to do it for this week's episode of Change and the Market. Thanks to Chris for joining us once again. As always, you can do us a giant favor. If you enjoy what enjoy listening and watching us, go ahead and leave us a like, a follow, subscribe, wherever you're watching or listening to this content, and come back next week for another brand new episode of Change and the Market.